Hi there, everyone. This is the post-Bernanke, post-FOMC video. Thanks again, by the way, to everybody for clicking yesterday. Appreciate your supporting the advertisers on this site. Made a real difference. My gentle reminder there, so thanks. So today was really interesting, as we all knew it would be. Here's the ES on a minute bar basis, just for really just for the past 24 hours. And as you can see, it had some strength, meandered along and sort of wait for Bernanke mode for a while. And strangely, after the announcement, it actually went down a little bit and just didn't really react much of anything at all. And then when it did this really explosive move, it's so strange because you would think that the move would happen within moments of the announcement or the economic data, what have you. It seemed to take an hour or more for the world to digest it. That digestion, of course, is the indigestion of the dollar. Here is the euro exploding higher as the U.S. dollar makes its way toward worthlessness. So, a few comments here. Now, as far as my positioning, I simply stated a whole bunch of little shorts and a couple of big longs. I'm long USO and I'm very long the spiders, SPY. The SPY is kind of the cleanest of all the graphs. In fact, I wanted to specifically mention that I'm actually getting kind of distrustful of just straight up long equity positions. They're just, let me give you a couple of recent examples. So for example, Unisys right here had been shaped up very nicely in this basing pattern, and kablam, yesterday got hit really hard and today it fell a bit more. And a more recent example, MIPS. This had been a very strong stock and had was again, I'll sort of zoom to the right portion here. So it had this huge basing pattern, moved much higher, had this retracement, but it seemed to be a retracement down to a nice clean support level here, and it lost about a fourth of its value today alone on record volume. I was looking at this yesterday thinking about buying it. I decided that considering all the overhead supply, it would make sense, and thank goodness, because this one got really walloped. And even something I am short, Apple, this is, I mean, look, if Apple could fall today, albeit only by 27 cents, but any stock that could fall on a day like this, you really got to kind of wonder. So this is a short I've got right now, and if the market got at all weak, I think this would suffer very, very quickly. But as I said, the one item I'm quite long right now is the spider, SPY. The pattern is obvious to everyone who's not legally blind, and everyone's talking about it. And I mentioned yesterday, the old saw, if it's obvious, it's obviously wrong. Well, that isn't necessarily the case, because as I and others have pointed out, the inverted head and shoulders patterns that we've seen have been obvious and obviously worked. And so this one is substantially smaller than this monster from last summer, but the target on this is 143, which I've highlighted in green there, and given the intersection of those broken support lines, and incredibly they are broken, that kind of makes sense. So if this went up to about 143 or so, that I think would be an interesting target. I'm going to be keeping a tight stop on this along the way, because if and when this pattern did fail, let's just be totally hypothetical here. Let's say tomorrow it sank beneath this support level. That would bode pretty poorly for this pattern playing out. What should happen is we get a nice, healthy kick up higher. But the title of my post is mixed, I think mixed messages, and we're getting that. So for example, looking at the NASDAQ composite, new recovery high here. In fact, higher than the highest point in 2007. Can you believe it? I mean, this is like a decade plus high. So this is the highest the NASDAQ's been since the internet bubble. So we've actually bested the heights of 2007. The Dow Jones Industrial Average Hasn't gone above 2007, but is at a new recovery high, and kind of reapproaching that broken wedge. As we've seen here, the sell-offs have been getting tinier and tinier. So we had this wonderful one here back last spring, and then a smaller one here, and then an even smaller one, and then I'm starting to lose track of what was what here. That maybe this was Egypt/Libya, and then the nuclear disaster in Japan. You had to get a microscope at these points. So the moves down are getting smaller and smaller, which I guess implies greater and greater control from the powers that be. And if we look again at SPX, not the spider, but its underlying index, we can see the same pattern and the same target being at around where I'm pointing. So a little bit of a ways away. I was going to name this title, this post, "We're all Forex traders now," because that's what it's starting to feel like. This is all being driven by the plunging dollar. The euro, as you can see here, moved from last June up till now, which is not quite 11 months. Really a staggering move, especially in the world of Forex. And we're reapproaching this top seen back in late 2009, so that's worth watching, but it just seems to be kind of relentlessly moving higher. A more vivid view as to what's happening to the dollar is the ironically named UUP, the up, which is really down. New lifetime low on this instrument. This is this is the so-called bullish fund on the dollar, and it's just really plunging badly. Now, the precious metals you think across the board would be sensationally good. By and large, they are, but let's take a look at some other mixed signals here. Here's the GDX. If you look at, for example, the 60-day hour chart on this, really not in the clear. Not in the clear here. It's got to overcome this high and, more importantly, this high right here. Until it does so, this one, I would view with some skepticism. And I watch GDX as one of the charts I have up all day long. It's maybe even more important than the ES chart, strangely. The straight up metals, though, had a wonderful day. Gold, GLD, new high in history, I believe, human history, the highest price ever, and has broken above this ascending wedge pattern. And silver, the past 3 days in silver the past 3 days in silver have been the kind of move that used to take like a year. Let's just zoom in here on a minute bar basis. Look at this. Look at this incredible action. It's up and down, up and down. So those who have been nailing those swings have been just printing money, and those who have been misfiring on these swings have been getting just slaughtered. Because, today alone, up nearly 7%. And that's just, to me, astonishing. And then the double converse of that, the ZSL, new lifetime low on this, down nearly 14%. And I just wanted to point out, I don't know if any of you have been watching the volume on this thing. Let's pull up the volume. Just look at that. Even on this scale of the past several years, the volume has just absolutely gone crazy on this, even just in the past 3 days. It wasn't but a month ago. Actually, earlier this month, the volume was about 1.6 million. A couple of days ago, 35 million. Just look at this. This astonishing volume activity. It's like everybody just discovered this thing exists. The last thing I'll point out is OIH. Energy seems suspiciously weak here. A little bit strange. Definitely would keep an eye on that. So as we look at OIH, amazingly actually fell today in spite of a very, very, very weak dollar and very strong equities. Curious, worth watching. So this is the last post of the day. It's just 2 in the afternoon here, but I have had it. I'm going to do other things now, and I'll be back in the morning. Thanks a lot, and good luck for the remaining couple of days this month. Bye.